The big news story today, of course, is that we are seeing markets hit new record highs. The S&P 500 closing above the previous record high, which was, well, let's bring it up right now. We'll see where we exactly closed. But for more on the markets, let's now bring in Scott Bauer. He is the CEO of Prosper Trading, joining us from Chicago. Scott, great to be able to catch up with you today. Amazing to see these numbers climb once again in the S&P 500, closing above the previous record high. What are you attributing the strength to?
You know, I think we're all around in this Goldilocks environment. And I say that because, we all know that earnings estimates had been lowered. And what we're seeing right now from the S&P 500 companies are earnings that not necessarily are big blowout earnings to the upside, but they've just been good enough. And guidance hasn't been bad. So I almost paraphrase this as they're not so bad. Not that there's such blowout numbers, but they're not so bad. And we're seeing that across the board. So that's number one. Number two, the low interest rate environment. Number three, we've got some at least positive developments perhaps with U.S. and China. So, all of this being said together, and you throw in some of the economic reports that we've gotten over the last few weeks, and it's just this Goldilocks environment that have taken us to all-time highs now. Looking at, after the bell here, I'm looking up at some quotes here. You see Snap, not a big S&P, stock, but you look at a stock like that on the heels of Twitter, great numbers, stock is up. And you look at some of the other Texas Instruments, stock is up today. So, real positive, real green across the board here.
Yeah, actually, let's take a look at Texas Instruments because it does actually have an impact in terms of the broader market movement and then also, of course, sentiment as well. So the company did come in with a beat here. We do have the company reporting first quarter earnings, I should say, of $1.26. That is a beat on the bottom line. Consensus was $1.13. Importantly as well, their second quarter revenue, the revenue range is $3.46 billion to $3.74. That does bracket nicely consensus expectations, which is $3.6 billion. And importantly as well, they do see the second quarter earnings of $1.12 to $1.32. It's a pretty wide range, but that does bracket.
A wide range.
That's a wide range. I'm not sure about that or how that's going to get interpreted by the market. Consensus is 124, but nonetheless, it does bracket that. But a nice beat on the bottom line for the first quarter of the year for Texas Instruments. So that's going to be a nice positive, I would think, for some of the tech companies tomorrow.
Yeah, no doubt. I mean, you've got a Lam Research coming out and Micron's coming out and all these other ones that we're watching. And just like what we saw yesterday or this morning with Twitter, which exploded, now we're seeing that with Snap. Does that mean that's going to happen with Facebook? Who knows? But some of these early reports that are coming out that are leading the way in their specific sectors, you got to like what we're seeing so far.
Scott, as it relates to the market and what we're seeing in the market on the back of this strength, volumes were up nicely today. Are you seeing investors take profits? Or are you seeing them protect positions using options?
Not yet, which is very surprising to me because I always instruct, the people around me and the people at Prosper, when insurance gets cheap, like it is right now, and whether that's, in the VIX or in the S&P, whatever you want to look at, when insurance gets cheap, that's the time to buy it. Buy it when you can, not when you have to. But I haven't really seen that rush in yet. We haven't seen outsized put trading in the S&P space yet, which is very surprising to me given the gains. I mean, the S&P's up, 18% or so for the year. So, I would expect that to come in, but maybe, just maybe, that's why VIX is not going down any lower. It is low around the 12 handle, but maybe that's why we haven't, really seen it back down around that 10.5, 11 area yet.
So you're saying, though, that to buy protection on your portfolio, which means if you buy a put option, it takes you out at a certain level. You're not seeing many investors do that. You're not seeing that in the options market.
Not yet. No, No, and that would be in the S&P space where you'd go out and buy some puts, or if you're going to trade in the VIX, you'd actually buy some upside calls because, as the market sells off and VIX rallies, but not really seeing those outsized numbers yet, which is very surprising to me, which tells me there's still not just complacency in the marketplace, but like I mentioned earlier, maybe the market is firing on all cylinders. The economy is just right. Just where it needs to be. Interest rates not going up anytime soon, although I actually think that the next move that the Fed is going to make later this year will actually be a rise in interest rates and not a cut.
which that's something I want to talk about in just one second. But I also want to give our viewers the results from eBay. And the reason being is because if the economy is firing on all cylinders, you might be actually seeing that in the gross merchandise volumes over at eBay. Came in pretty much in line with expectations. 22.59 billion, expectations 22.6 billion. So let's call it in line. And there was a beat on the bottom line, 67 cents versus 63 cents. So it looks as though there was a nice result here over at eBay. Net revenue 2.6 billion versus 2.58 billion expected. So some nice results at eBay. Just probably lends itself to the strength of the U.S. consumer.
Totally agree with that. And you know, I don't see anything derailing that at all in the coming months unless we see just a blowout in the oil space. Yes, obviously the big rally that we've seen in oil has translated to higher prices at the pump. But at this level right here, even though, you know, $3.20 a gallon gasoline is expensive, that's something that the consumer can absorb right now. Yeah. However, if we don't see prices pull back, that could start to put a little crimp in consumer spending. Scott,
we're watching eBay shares trade in the aftermarket, and they are actually up over 4%. And I think one of the reasons why is because of the guidance that they're giving, which is the second quarter adjusted continuing ops is 61 to 63 cents. The expectations are 59. So they're actually raising guidance versus where expectations are for the second quarter, certainly likely helping, in addition to the results, the stock in the after-hours market.
Yeah, we've seen actually, you know, for the last couple of weeks, the stocks that have really taken off due to earnings have not necessarily been because of higher revenues or higher bottom line. It's all been about that guidance, and eBay providing that good guidance right now, higher than expected. I think that's what, you know, the street, the retail is liking right now, pushing the stock higher.
So when you take a look at all these results, and they're coming in a little bit better than expected, mind you, expectations were pretty low, and people are expecting earnings to be negative year over year, but we're off those lows. Do you think that will lead the U.S. Fed to raise rates, the corporate earnings results, or do you think we're actually going to start to see some inflation?
I think a little bit of both. I think what we've seen in terms of these economic reports I talked to, you know, about a little while ago, CPI and even GDP just inching up a little bit, I think we bottomed out. So whether we raise rates or not, I do not see a decrease in rates. I do think, though, however, that if this earnings season is as robust as it started off, you know, if 3-4 weeks from now we get through this entire earnings season and we continue to see this here, that is going to put some upward pressure on the Fed, in my opinion, to raise rates a tick or two.
Scott, one of the concerns that some investors have is that you're seeing the price of bonds move higher and you're seeing the equity markets move higher. History tells us those two items can't happen at the same time.
Diverge.
They can't diverge.
Right.
So do you think, though, that that it sounds like the bond market might be right, or will it be wrong? How's this going to play out? Or do both markets move higher in the near term and medium term even?
Yeah, I think we do see them both move together, and I think that move is higher over the next probably 6 to 8 weeks or so till we get finished with this earnings season, till we get maybe some resolution on the tariff talk, which, you know, perhaps by the end of May, so another 6 weeks or 5 weeks or so, maybe we're going to see a light at the end of the tunnel there. I think they do work in tandem. That being said, now is the time, as we talked about earlier, in my opinion, to buy this cheap protection, right? I want to stay in this marketplace. If I'm long in the equity space or even the bond space right now, I want to stay in the marketplace, but I'm willing to pay a very, very cheap amount for insurance and give some of that back to protect myself in case all of a sudden things turn on a dime.
Okay, we'll leave it there. Scott, great to catch up with you. Thanks so much.